What if a single fund could shake governments, challenge central banks, and reshape the financial world? The quantum fund did exactly that. It wasn't just another investment vehicle, it was a weapon forged with intellect, instinct, and fearlessness, and at the center of it all stood George Soros. But how did one hedge fund rise to such power? And how did it keep winning while others collapsed? Let's uncover the mind and machinery behind the billion-dollar beast that rewrote financial history. When Soros founded the Quantum Fund in 1973, the world was entering a new era of uncertainty. The gold standard had fallen, exchange rates swung violently, inflation was climbing. Most investors were terrified. Soros, however, saw opportunity in chaos. Markets are constantly in a state of uncertainty, he once said, and money is made by discounting the obvious and betting on the unexpected. Isn't that a radical way to see the world? Do you look for safety or for opportunity hidden inside disorder? The Quantum Fund wasn't built on traditional investing principles. It wasn't about slow growth or buy and hold. Soros didn't just observe the landscape, he wanted to influence it. Instead of spreading risk safely, he embraced concentrated convictions. If he believed a bet was right, he didn't dip his toes, he dove in headfirst. Sometimes risking more than the fund was even worth. Would you ever risk everything on a single belief? Most investors answer never, and that's why most investors never change history. The Quantum Fund's strategy came from Soros's worldview, his reflexivity theory. He believed markets were driven by human emotions, and those emotions created predictable distortions. If he could understand the emotional waves, he could ride them, push them, even reverse them. Imagine being one step ahead of fear, one step ahead of greed, one step ahead of everyone. That's the advantage Soros hunted. But he didn't hunt alone. His secret weapon, one of the greatest traders ever, Stanley Druckenmiller. While Soros crafted the grand philosophy, Druckenmiller executed with precision. It was the perfect duo, imagination and discipline fused together. Together, they turned quantum into a profit-making phenomenon. In its first 2 decades, the fund returned an astonishing average of more than 25% a year. That means $10,000 invested early became millions. But let's pause and ask, how is that even possible in such a ruthless market? The answer lies in mindset. Most investors try to avoid mistakes. Soros knows mistakes are inevitable. The real danger is refusing to correct them. He famously said, "It's not whether you're right or wrong that matters, but how much you make when you're right and how much you lose when you're wrong." Do you allow ego to keep you in losing decisions? Or do you pivot quickly when reality changes? Quantum's philosophy was brutally honest. If a trade didn't act as expected, Soros cut it fast, no excuses. But when he sensed a winning wave, he doubled down, tripled down. He wasn't afraid of being wrong, he was afraid of staying wrong. The world first saw the full power of the Quantum Fund in 1992, during Black Wednesday, when Soros broke the Bank of England and made over $1 billion in a single day. Many believed it was a one-time miracle, but they were wrong. This was merely the beginning. Quantum didn't follow trends, it set them. It didn't wait for validation, it created validation. It showed that belief isn't just a market factor. Belief controls markets. But here's the question I want you to think about. If the market depends so much on belief, what happens when the person shaping belief is playing for profit? Is it manipulation, or is it simply superior understanding? Quantum took massive positions on currencies, commodities, global equities, leveraging geopolitical insight like a strategic chess master reading the opponent's weakness before they even moved. Soros and Druckenmiller didn't study numbers as much as they studied human behavior. They studied fear, greed, political missteps, government lies. They looked for places where reality and perception were preparing to clash, and they profited from the explosion. Does that sound like skill or danger? Heroes or villains, quantum proved one truth. Knowledge is profitable, but courage turns profit into empire. By the late 1990s, the quantum fund wasn't just wealthy, it was influential. Journalists watched it, governments feared it, competitors tried to imitate it, and the world began asking how much power should one fund have. As quantum fund grew stronger, so did the global consequences of its actions. The influence of a single hedge fund was terrifying to some, inspiring to others. When Soros and his team moved billions into or out of a market, prices responded. Currencies shook. Politicians reacted. Sometimes entire economies bent under the pressure. Who should hold that kind of power? Elected leaders or billionaire investors? The late 1990s tested quantum more than ever. In 1997, the Asian financial crisis erupted. Thailand's baht collapsed first, then panic spread to Malaysia, Indonesia, Korea, and beyond. Some leaders accused Soros of causing the crisis. Mahathir Mohamad, Malaysia's prime minister, called him a villain and even a financial criminal. But Soros pushed back, arguing that governments ignoring economic weaknesses were to blame. So what do you think? Is the person who lights the fuse guilty or the one who built the bomb? Quantum Fund was not a silent observer. It was a participant profiting from the same volatility that harmed millions of ordinary citizens. This sparked a global debate. Should market freedom have limits? Should billion-dollar bets that move nations be regulated? Or is that the price of transparency and capitalism? Soros himself struggled with this ethical paradox. He said he made money to support his philanthropy, to fix the world. But can you repair a system by first destroying parts of it? Does good intention cancel financial destruction? One truth survived every accusation. Quantum Fund delivered results. By 1999, it had produced one of the greatest performance records in the history of finance, over 30% cumulative return since inception. No pension fund, no bank, no mutual fund came close. But with enormous success came enormous risk. Soros knew what others could not admit. When you hold too much power, the world eventually pushes back. Quantum funds' influence and bets became so large that they themselves started shaping markets too strongly. Reflexivity turned inward. Any mistake could now trigger catastrophic loss. And in 1998, that mistake nearly arrived. Long-term capital management, a rival hedge fund, also run by brilliant minds, collapsed under the weight of its leverage. It almost dragged the entire global financial system down with it. Quantum survived, others weren't so lucky. The incident frightened Soros. He began to recognize a hard truth. No empire survives forever. Power attracts enemies. Market cycles humble giants. And timing eventually turns on even the smartest investor. Soros transformed the quantum fund into something less direct, reducing risk and shifting focus toward philanthropy, but by then the legend was sealed. The quantum fund wasn't just an investment success, it became a symbol, a warning, proof that individuals can challenge nations and win. Now, I want to ask you something deeply important. If you could hold that level of influence, shaping markets, guiding economies, would you use it responsibly, or would you chase bigger victories? Do humans deserve such power, or do markets punish those who dare to wield it too aggressively? The quantum fund raises a haunting question. Is financial greatness defined by how much you profit, or by how carefully you use the power that comes with profit? The world may never fully agree on the answer, but this much is certain. Without quantum fund, global finance would not look the same. Soros changed the rules. He changed expectations, and he proved that the greatest force in the financial world might not be money. It might be conviction. And now, the question is, who will have that conviction next? Thank you for joining us on this deep dive into George Soros's fascinating world of reflexivity and market psychology. If today's journey made you question how financial markets really work beneath the surface, then imagine what more we can uncover together. Your curiosity is what drives this channel, a community of investors who think differently and act with purpose. Before you go, I want to ask you something. Are you preparing yourself to become a smarter, more strategic investor? Are you ready to challenge the narratives that most people simply accept? If your answer is yes, then you're already one step ahead. Subscribe to the channel. Like this video if it added value. Share your thoughts in the comments. Your voice matters here. Let's continue learning, questioning, and growing together. See you in the next episode, Hidden Investors.